Very good evening to all our mentorship traders. Friday evening, 9 p.m. Indian Standard Time, the 2nd of July 2021. We had a slightly volatile week. So let's talk about the markets and let's try and understand what we can expect the next week first. I'm taking a look at the Nifty monthly chart here. Now we had a close of month. The month of June 2020 came to an end. It was more like a spinning top, like a small bodied candlestick after a pretty decent, healthy, long-bodied move in the month of May. It's more like a consolidation. Sign of slowdown, but no as such clear-cut signs of any kind of divergence or bearish pattern per se. So the long-term picture of the market is still fairly up, strong, and I think it should continue to unless we notice any significant signs. Weekly charts have got a bit of divergence in it. We've got this week, in fact, it seemed like in the afternoon that we are also headed for 5 consecutive negative days, Monday to Friday, but then later on in the afternoon, we got a bounce back. Weekly charts are, yes, there is a mild divergence up here, but it's not of concern as of now unless the lows are broken, which is close to 15,500. The trend in the intermediate time frame is also strong. It's the daily time frame and the intraday charts which are more interesting for the Nifty. I know it's a little cluttered here with these horizontal levels that I've drawn, but 650, 700 was the first zone from where we got the bounce back on the 23rd of June and the 24th of June. That's exactly from where we got the bounce back today after 4 consecutive negative days. If this let's say this is the short-term support for the index. If this holds, then the index will try its best to take out that 15,800 mark on the upside. It needs to take that out, or else the same theory. I'm sorry, the same theory. You know, since the lows over here of late April, all the corrections have been one-legged. And last time we spoke about this was during this time when we had this correction. Then we had the bounce back and it never actually corrected for the second leg. Now we have the first leg again from a new life high. Will it go up? The chances next week, early next week, is very high that the index will try its best to take out 15,800 and maybe further up. The million-dollar question is, will it be able to sustain? If it fails so, then we might get the first complex correction in this rally. Might. I don't want to sound bearish. I just want to sound a little cautious, careful. So 650, 700 is the first level. We got a decent support at 500, 550 also. And then upside gap with previous highs, which is the 350, 450. So we've got some decent amount of levels on the downside. Even if the index corrects, then I would say it's a healthy correction for the weekly, monthly charts. So no need to change the overall bias on the market. From a short-term perspective, if you take a look at, let's say, the 125 or the 75-minute time frame, you will see this triangular breakdown here, then a bounce back which came close to that level, and then the follow-through move. In this follow-through move, if I break it down further and show you the 15-minute time frame, the levels from Monday to Tuesday's perspective, you should look at 760, 780, close to 800. This is where the index did manage some support. Then it broke. It broke, it bounced, it faced resistance, and it fell. So previous lows becomes current highs. This is a sign of a strong downtrend. And this sign of a strong downtrend will only negate itself when we find the index above 780. Let's use 800. Then only can we say that the index has strength further to take to 880, 900, and maybe a new life high. So for me, Monday, Tuesday, 800 on the upside is important for the index not to just break above it, but very important, it needs to sustain above it. So if it goes about 800, 15,800, and if it tries to sustain above 15,800, then which are the stocks and the sectors which can do that? Well, I feel that the Bank Nifty has a role to play. If you look at the daily chart of the Bank Nifty, it has also gone through similar kind of a correction, but the last 2 days are significantly encouraging. Small bodied candlestick, pretty decent intraday volatility. Stocks like Axis Bank, ICICI Bank, Kotak Bank, SBI are the ones that should kick in. Bank Nifty should support. Financials should also, if you take a look at the Fin Nifty index, not that liquid, but nevertheless is also similar kind of a behavior, from which if you take a look at CNX Finance, will probably give you a better picture. Back to its previous lows, we've got a bullish Rami pattern on the finance. So financial stocks, Bank Nifty, we know it's important. They have more than, I think, 33-35% weightage in the overall market. So even 1 or 2 days of movement from the finance and banks, and we have the index holding well, it has that kind of weightage. There's one more sector which has reliance in it. I'm talking about the energy. Now, if you take a look at the CNX energy, it's gone through a two-legged correction, what I was trying to explain with the help of Nifty. First leg, bounce back, and the second leg. So second leg correction takes the CNX energy index back to the levels where it had very good resistances. Now, earlier highs, if proven as current lows, if it proves to be current lows, that is, if we see a bounce back, then it will be a significant rally, at least back to its previous highs. If this theory proves out right, then energy will be a very interesting, important space to look for. Reliance, we know how important it is. OMCs also can be important. So energy is there, finance and banking is there. Auto is on the verge of a breakout. Doing good, holding well, short-term cup and handle kind of a behavior that we can see. Call this a cup, call this a handle. Kind of a breakout on the auto index. We've seen how well Maruti did move. Others need to kick in. Bajaj Auto did give a nice high momentum move this week. So auto can give us that breakout. Finance, Bank Nifty, energy can support it. IT is stretched. IT is tired. We saw that today in the first half. Then the second half, we saw how strongly it wants to bounce back, and we did see that. But I think from here on, we should not expect too much from the IT. It has played its part. Metal, interesting, because metal is getting into a range. It's got some decent resistances. It's got some pretty good supports. We know how strong the previous trend was. It's buying time. It's in a strong uptrend, so it will definitely manage to bounce back. It has gone through 4 days of continuous correction, but it'll be difficult to maybe time the metal right now. Pharma's played its role fairly well, and it's continuing to do that. But all eyes, I would suggest, should be on the Bank Nifty, the large cap private sector banks, add public sector SBI also to that. Auto on the verge of a breakout on the upside, and financials. If this plays out well, then we might get a move above 800, maybe sustain above 800, and then maybe the rally can continue. But going forward, I would request and suggest that at least the first couple of days, Monday, Tuesday, unless it's a breakaway move, be a little careful and cautious with your long trades, and try and keep the trades as short-term, as short-lived. You would have observed and experienced this if you're a short-term trader, that how stocks gave a high momentum move in the first half, and by the time it was second half or the next day, most of that move had fizzled off. We saw that multiple times this week. REC, PFC, Bajaj Auto, and many such stocks. So make use of these intraday high momentum moves and book. We saw that in IOC today also, if you have traded that. So keep your long trades, the life of the long trades limited, and be a little careful with your long trades. If we find the index sustain above 800 and everything is back to normal, then shouldn't be an issue. Till then, trade well, use your stop losses, and now let's move ahead and talk about the stocks which you have on your radar, on your list for the next week.